All right, so another week, another all-time high in most markets. The S&P touched 4,500 for the first time ever. It did close below that on the week, but again, it was, I believe, Thursday that actually, no, Wednesday. Sorry, Thursday that it hit. Actually, no, it was Wednesday that it touched 5,500. And again, it did trend down from there, but the S&P and the Nasdaq both were up on the week. I think it's 8 out of 9 or 9 out of 10 straight positive weeks. And personally, this is just my gut feeling here. I think that we are very near the top. Now, does that mean that you should be selling and going into cash? Absolutely not. My personal strategy has just been to slow down the buying a little bit, in that I'm not buying any of the indexes right now. Normally I do dollar cost average those every week or two. That I've cut out because I think that the indexes are certainly overvalued right now. It's mainly the market cap weighted ones. And I still think that there's a decent amount of companies out there that are not overvalued. And I mean, I've got into some of them recently, and I'll go into some of them in the near future. But I wouldn't consider this a time to be selling and going to cash, because nobody knows what's going to happen, right? Nobody knows what's going to happen. For all we know, we could go higher because the market certainly is not egregiously overvalued. And I mean, another problem with going to cash is, I mean, maybe you go to cash, the market pulls back 5%. You think, oh yeah, we're going to have this big crash. I'm going to wait till it's down 10 or 15 or 20%. And it goes right back up, back to new all-time highs. So trying to time the market is extremely hard to do. So that's not something that I personally try to do, or I personally would recommend, just based on my opinion. But I do think that it's fair that if your investment strategy is dollar cost averaging, which again I think a lot of people are in that boat, then I think it's fair to adjust the rate at which you are buying based on relative valuations. That's my opinion. Is there any hard data behind that? No, I've never looked into it. It's just my gut feeling. And I think it makes sense because I buy mostly stocks, but I do have maybe 10 to 15, maybe 20% that I do have in indexes. And that, I'm not buying any indexes right now. Like I said, I'm still buying stocks, and again, like I'm constantly finding new ones, and I'm evaluating the ones that I'm currently dollar cost averaging into, based on valuations, based on future projections. And if they still look good, I keep buying. If the price looks good, the company looks good, I keep buying. And if not, I just stop. And I set a price target for whatever the number is that I feel like would be fair value. And if it doesn't get there, fine. If it does, great. You start buying again. So that's my opinion on that. As far as the near term goes, I think that it's we're overdue for a pullback. Again, it could be 6 months from now. Nobody knows when it's going to happen. But I'm if I had to bet money, I would for sure be betting that we'll see a pullback in the summer, maybe the early fall again. Who knows? But I think that it's inevitable. When do you start buying again? Absolutely nobody knows. It could be a 5%, 10%, 15, 20. Absolutely nobody knows. That's kind of a personal preference. My personal preference would be wait for maybe 5%, because 5% pullbacks happen. I think it's like roughly 3 times a year. 10% is like 1.5 or something like that. And then 15 is kind of the over-under for the average year. Now again, that doesn't guarantee anything. It's just playing the odds. And right now, I think it's fair to say the market's overvalued. As far as the next cut, that's the big thing I think of the market right now is, when's the Fed going to cut? And I mean, it's very likely that it'll be 25 basis points. But again, is it more? Is it less? I don't know. But I think the one thing that it's fair to say is that as time goes on, the chances of the next move being a hike is very low as time goes on. And I think that there's a lot of people out there that are talking, oh no, they need to be hiking. But it's like, what out there, I mean, I'm sure there's some things, but there's not a lot of things out there that they point to a very strong economy. And as time goes on, I think that's just going to get exacerbated, which means we're just going to be more likely to cut. So I think that I'm still a believer in higher for longer, but I think that I would say probably late this year, early next year is where I would set the over under. I think that from a political perspective, they're going to be pretty hesitant to do it prior to the election. After, I think it's fair game because it's not going to appear political if they wait till after. But if they do it right before, it's going to appear as a political move. So I think that they're pretty, just based on my research, my opinion. I think that they're planning on doing it after. Whether it's, I think the next one after would be the December meeting. So that's probably the rough over under on when I would set. Now again, it depends on a lot of things. It depends on inflation, the economy, jobs numbers, etc., etc. But personally, I don't see things getting significantly better between now and then, which means the next move probably is going to be a cut. And what do I mean by that, and why am I getting into that? I think that if you want to be buying bonds, now is probably the time to do it because, again, just my opinion, I could be wrong here, but again, if you're buying bonds and rates go down, the value is going to be going up, right? So if you're buying TLT is a little bit more risky, but if you're buying like SPHY, that's an ETF that I like. You got like a 7.5% yield. Again, if rates go down, the value of those funds is going to go up, and you can turn around, sell those funds, and turn around and start buying stocks. That's my strategy. That's my strategy personally and in the mock portfolio. And I mean, honestly, it hasn't worked out great so far because the market's only gone up since I started doing it. But I think in the long run, I don't think there's going to be a significant difference. I mean, the one other big piece of news in the stock market this week, Nvidia became the largest company in the world. Now, again, they are down quite a bit since doing that. What are they down since? They're down about almost 10%. So I'm not sure. Let's see, 3.22. Let's see if Microsoft is bigger here. That is the wrong company. 3.31. So again, Microsoft did slightly outpace them again. But at one point this week, they were the largest company. Now again, I think that this is a testament to how the market definitely is overvalued right now. But I don't think it's egregious. There's a lot of people talking about it like it's dot-com bubble 2.0. I don't think that's the case. I think that fair value on the S&P right now is probably 5,000, maybe 5,100 even, maybe even 52. It'd be tough to say, but I think that it's not, I would say not any more than 10%. Like I said, if we got a 10% pullback, I think there'd be a lot of companies out there that would be looking really good on a valuation basis. And that's not that large of a pullback. I mean, that could happen in a month or two easily. So I think we're overvalued, but I don't think we're egregiously overvalued. And I mean, if you look at Nvidia, I mean, based on PE, they're actually below their 5-year average valuation, and based on free cash flow, they're only slightly above. Now, both of those are very, very pricey. I mean, I would maybe pay like a 30, 35 price to free cash flow. And I mean, it's at 81. So based on those numbers, it's got to come down 50, 60%. So again, fair value, just spitballing here, maybe $60. So again, I think that they're very overvalued. But the question with Nvidia is, can they maintain the growth that they've had? Because I mean, if you look at their growth here, revenue has grown 200% over the last year. They're obviously not going to be able to maintain that. But I mean, if you look at next year's projected revenue growth, 51%. So, I mean, Nvidia certainly deserves to be trading at a premium. Like that's I think it's very fair to say, and very egregious to say that they shouldn't. The question is, are they overvalued where they're at right now? And I think it's absolutely yes. But again, it all depends on the future. What level of growth can they maintain? They're not maintaining 50% revenue growth. It's just not going to happen. The question is, at what rates do they top out? And I think that it's going to be a fair bit lower. I think that they're, like I said, I think they're worth right now. Right now, you could say fair value is a 40, maybe 50 price to free cash flow. That means they're worth 70, 80 bucks a share. So I think that they're certainly overvalued. I don't think there's a company in existence that I would pay more than 40, 50 price to free cash flow. Meaning, I don't care how fast you're growing. The rate that you're going to have to grow to be able to grow into that high of a valuation is egregiously high. So the one other thing I wanted to talk about here, again, Bitcoin is down quite significantly over the last month. I mean, for Bitcoin, it's not. It's down 7% roughly. On the week, it's down like 1.5 or something. But again, nothing fundamental is wrong. I mean, for example here, Michael Saylor, MicroStrategy has acquired an additional 11,931 Bitcoin using proceeds from convertible notes, excess cash at 65,883 per coin. Again, MicroStrategy now holds 226,331 Bitcoin with an average price of 36,798. So when it comes to Bitcoin, I think that the problems we're seeing right now are due entirely towards speculation. I wouldn't say entirely. That's going too far. But I think it's mainly due to speculation. And the reason for that is if you hadn't known the price of Bitcoin and someone would have told you a year ago what we have, where we currently are, the ETFs, the whales overwhelmingly buying, some institutional adoption, you name it. Right, the government basically saying, yeah, we're not even going to think about regulating it because they're not even regulating Ethereum or Solana. They're not going to regulate Bitcoin, right? So if someone would have told you that, you would be head over heels if someone would have told you that a year ago. Like that was the absolute perfect scenario. So based on that data, well, why would you be bearish? And I think the reason for that is there's a lot of, for lack of a better word, like short-term thinkers or greedy people that Bitcoin returns whatever 100% per year going back a decade, and people just expect that like clockwork, and that's not how it works. Bitcoin is very volatile. It'll go up 200% and it'll go down 50%, and then it'll go up 100% back down 50%. Right? That's just how it works, and it's pretty much even more volatile than the stock market. And I think that this current little cycle that we're going through, I think it's just a way. Two reasons. It's a way for some institutional people to get in at a good price, and number two, it's just a way to shake out the weak hands. There's a lot, like I said, there's a lot of short-term get rich quick people. Like they're typically the altcoiners, but a lot of times they get into Bitcoin as well, and there needs to be stuff like this to shake them out, to shake them loose. So anyway, that is what I think is going on with Bitcoin. Again, just my opinion, nobody knows, but I've said time and time again, I think we're going to see a big run up in the summer or in the fall. So it's just a matter of time. So anyway, that's what I wanted to bring up today. If you liked the video, please like, comment, subscribe, all that good stuff, and stay tuned for more.